Good evening, everyone. Welcome to Dark Matter Radio. This is your host, Ronnie McLean, a new thunder for i.n.n.a, and I am glad that you are here with me today. Today we're going to talk about something very, very important, which is happening right now. Now, we've been, over the past month or so, reporting on the economy and what's going on with a major collapse I feel is coming, and I'm warning everybody about. I believe this collapse is going to be coming sometime between now and 2020, around December. I do believe so. Normally I don't give out dates, but I believe that this collapse is coming. If it doesn't come within that period of time, very shortly after. But this is going to be something that everyone's going to be needing to understand. So this month, September 2019, I believe it was on the 15th to the 16th, the Fed went out and supported the repo market. Now, most people don't know what the repo market is. So let me just spend just a little bit of time giving you an understanding what the repo market is and why this is so important, why the Feds went out there and pumped in now over almost $370 billion to the repo markets. Now, one of the things I also want to say before we get into that is that none of the economists understands why the Fed is doing this, right? Why the Fed is doing this. So what is a repo? So let's get an understanding. The repo market is considered to be when banks need to get money very quickly. I mean, short-term borrowing. And what I mean by short-term borrowing, very quick money, we're talking about 24 hours, maybe 48 hours. And a bank, when they find themselves in liquidity situations, meaning that they don't have enough money to cover a bill that they have to pay or cover some expenses, they go out and they borrow maybe $150 million, $75 million, etc., just to cover what they need to cover for that day or so, and then they pay the money back. So normally in the short-term markets, what happens is that the banks will go out to another bank. This bank will lend your money to another bank that needs the money, then that bank will pay them back with interest. Then interest is usually about 1.5%, 1.6%. So it's a very low interest rate, something that the normal person doesn't have access to. I mean, if we have to go to some, cash system to go get a 20% loan if we need something for 7 days or something like that, right? So this is what the billion-dollar banks do. All of the banks, they do this. So in this case, what happened is that the banks are going out trying to get short-term money, but the banks didn't have the money to give, right? So their friendly banks that were lending money to each other didn't have the money. So that was becoming a problem. So when this was a problem back in 2006, 2007, became widespread and everybody knew about it, and it became a big giant problem. So now, undercover, what the Feds did, they first injected about $55 million in to the system of brand new printed money, and then found out they needed at least $10 billion more dollars. So they injected another $10 billion in, which is $65 million on the first day, and then they needed to do $75 billion on the second day. And this is a problem because now what it's telling you is that these banks, all of these banks out there, have liquidity problems, and they cannot cover themselves in a way as to where their own profits are going to get themselves. So all the usual places where the banks go to get their money didn't have the money, all right? And that normal percentage of 1.62% on a year for their short-term loans, again, which is anywhere between 24 hours and maybe 48 hours, 4 days or something like that, they were not able to find the places where they can go get that money. So what happened is that they had to begin to start finding money at a higher interest rate. So there are some banks, because some banks have more than what they need, as we were talking about. So some banks were able to lend them some money at an interest rate of 10%. 10% on their actual yield on the money that they were being lent. So that's basically the repo market in a nutshell. The question is, what went on as to where the banks had to all of a sudden pay 10% and wasn't able to find their normal usual places to finding that 24-hour, 48-hour loans in the market. What has changed? And that is the mystery. So now what's going on is the Fed, for the next 10 days, is going to interject $75 billion a day into the market. So here we are again, we're with another bailout, but it's a quiet bailout nobody's talking about. This is the reason why here on Dark Matter Radio, we are sounding the alarm bells for people to get themselves into co-creation communities, because when this system goes down, it is going down, and there will be nothing you can do about it. We are trying to make sure that people understand that a lot of people that are out there talking about all this economic wealth and this, that, and the other thing, fine with that. Let it all be what it is. But the reality of the situation, there's something very, very, very devastating lurking behind all of the smoke. It is extremely important for you to understand that the federal government is now giving $75 billion a day for banks who don't have enough money to cover their short-term goals, right? So the majority of these banks are broken. And they're not working. And they're not working for you. So remember also that when these costs go up for the banks, they tend to pass their cost on to you. So normally what they would be able to do to be able to help situations is lower interest rates. But interest rates and the short term and then the long term is basically near zero almost still right now. And you can't find any relief into that. So what's happening, what's going on, and what has changed in order for all of this to be a devastating situation for the banking system, which seems to be collapsing right before our eyes. So with all this in mind, as I keep on telling everybody, it is important for us to understand that, these are serious symptoms. When the stock market crashed over 700 points and then another 400 points in August. What's going on now, where the Feds are now in September of 2019, injecting $75 billion a day well until October. It is important for us to ask these questions to ourselves about the Fed dumping $75 billion into the economy and possibly to avert a massive financial crash with interest rates going up, because, that's what led to the last financial crash. Also, when that Monday morning, the large-term loans became unavailable, the rates of these gigantic loans started to shoot up. And again, like I tell you, this is a symptom because these are all in place when it began to start happening in 2006, 2007. The other thing is that the high rates caused financial crashes in the past, and it's important for us to understand that. Like I said, in 2007, that was one of the things that they did, right? So the Fed panicked and flooded the market with lots of money. When we say lots of money, we're saying tens and tens of billions to the tunes of hundreds of billions of dollars now. And the question is why? Why were short-term loans unavailable? And where did the money go? And what shot up the interest rates? And the question behind that is, nobody really knows. All I can tell you is that we better keep your eyes open. If you're not in or learning about co-creation communities right now and how to avoid all of these things that are going around, I would say sincerely, contact i.n.n.a, contact Dark Matter Radio, have somebody come out to your area to be able to help train you and to begin to start helping you to be able to relieve this situation. If we do not secure and protect ourselves, we are going to be in some serious trouble. The Feds are now, right now, at this very moment, injecting $75 billion a day in short-term loans. Some of the excuses that they're giving is that the deficit is so high that they're, printing out more money for the deficit, and people are buying more bonds from the government. Well, if you buy that, that's well all and good. But still, with $22 trillion in debt and over $100 million in promise debt, we're not in such a good situation. So this is Ronnie McLean for Dark Matter Radio, coming to let you know that the Feds right now are injecting $75 billion a day into the short-term banking markets, financial markets, in order for banks to be able to cover themselves. We think here, Dark Matter Radio, and at i.n.n.a, that there is something very, very devastating looming. Prepare yourself. Get yourself in a co-creation community. Subscribe to our channel. Get as much information as you can. Again, this is Ronnie McLean for Dark Matter Radio. A new thunder for i.n.n.a. Have a great day.